Hello everyone, Terry Wright from LT Wealth Management Partners. This is a video discussing the Connor Clark and Lunn Equity Income and Growth Strategy. Connor Clark and Lunn is a Vancouver-based asset manager. They've been around a long time, and their equity income and growth strategy is one that we've used for clients. It's an excellent strategy. It's very dividend / value focused, and it's provided some great results over long periods of time, especially on a risk-adjusted basis. This slide that I'm highlighting here just illustrates how well the strategy has done from a return perspective. And as you can see here, it has produced better returns than the market, the Canadian market, and done so with less volatility. Volatility is often a measure of risk. Risk is a very subjective word, but it's very common in finance for volatility to be what is the measurement of risk. This particular slide here, I really like. It shows the upside capture and the downside capture. As you can see, if the market's up a lot, we're not going to get full participation, but quite a bit. But more importantly, on the downside, historically, this strategy has captured less than half of the downside. So I really like to see that. It's a great way to kind of protect on the downside, historically anyways, and past results are never a guarantee of future returns. This particular slide here is really interesting. Connor Clark and Lunn has always had a dividend focus to the companies that they select. And historically, dividend growing companies have been some of the best parts of the market on a total return basis. Historically, dividend payers have outperformed just regular companies, but even better, dividend growers have done even better. And as you'll see on the right side, the dividend cutting companies are ones that we really want to steer clear of. And on the bottom part of the graph, or the chart here, you can see that not only are the returns better overall, they're often able to be had with less volatility. It's kind of a win-win situation. So really like to see that, and Connor Clark and Lunn has been one of the better companies at finding companies that are fitting into those metrics. This last slide here just shows how well the strategy has done over the long term. On a year-to-year basis, there's going to be periods of underperformance, but as you know, being a client of mine, if anything, that I'm constantly banging the drum on long-term. LT and LT Wealth stands for long-term. So we often say if you don't have a 7 to 10 year time horizon for your money, then you shouldn't be in equities, period. At least a 5-year time horizon, but preferably 7 to 10, because even on an individual year basis, there's going to be periods of underperformance. But as you can see here, Connor Clark and Lunn has had an excellent rate of return over longer periods of time, outperforming the TSX Composite Index. I hope you enjoy that. Let me know if you want to get into more detail. I'm happy to send you this information. Not everyone has Connor Clark and Lunn working for them. It really depends on your situation, if they're an appropriate firm for us to consider. But there's not too many bad things I can say about Connor Clark and Lunn. So if you want to get into a discussion about whether this is a better fit than what we're currently utilizing in your portfolio, let me know, and we can have that chat. Hope you're doing well. We'll chat again soon.